After lunch, I guess everybody is feeling sleepy. The issue in Singapore is just too many good foods here. If I'm in the class, we can do some exercise by standing up, like rubbing each other. But no, this is a professional event. I won't do that. So my name is Xu Yang. I'm a partner at Tiger Brokers. I guess because after lunch, I will try a dry joke. Why don't financial advisors play hide and seek? Because good luck in hiding from them. They always find where the money is. Sorry about the dry joke. This is my first time here in Singapore presenting in a professional advisory conference. So little background about myself, but you can see here, I'm not going to waste too much time here. Myself, I spent 10 years in the US as an asset manager. We went direct to consumers, ultra high net worth family offices. So I've been in the advisory shoes for 10 years. So now I'm a partner of Tiger Brokers. We are a fintech firm. We provide both retail brokerage services and B2B financial advisor, EAM platform solutions. So I'm going to try to skip all the introductions here. We have our colleagues here on site. We have a booth outside. If you have any questions, please come to us. Happy to answer. So I came from a US advisory background. I'd like to start one question here. So how many advisor fintech solution providers are out there? Let's say in the US, including Singapore market. Anybody would like to take a guess? 20, 10, 5? Let's say above 50, raise your hand. Above 100. Well, above 200. Okay. So that's the fintech map. That's the whole fintech solution map for all those US providers out there, providing services to the US advisors. Some of them also provide solutions to advisors in Singapore or in Hong Kong or in European countries. That's a lot. So I asked our GPT, hey, tell me, how many firms actually are out there? There are about 230 firms. Look at the right-hand side. That's a list of the whole solution providers. Over 230 firms, that's a huge number. So look around. In our industry here today in Singapore, I don't know, maybe 10, 20 providers out there. So we further categorize those providers into different categories. You can see 20 of those categories. Client engagement, portfolio management, document signing, financial education, reporting. The question is, what do we really need? We are in the era of fintech and AI. So sometimes we are overwhelmed by all those solutions out there, too many choices. So if I were going to start an advisory firm today, I need to put the pieces all together, from the end to the beginning, from client engagement to client reporting to compliance to fund selection. There are some stats, very interesting, we recently found out. So the blue line, that's the average dollar spent on softwares in the US industry for the advisor. You can see probably like $130,000. That may not sound like a pretty big number, but that in the US industry, there are about over 30,000 advisory firms out there. Collectively, they manage over $100 trillion. Huge industry. If you sum them up, the annual recurring revenue for just providing a software solution to the whole market, that's multi-billion dollars. We further look into, what do we really care about as the advisor? You can see the blue line. So every year there is a survey, in which area you would like to spend more money on. The first one, I guess everybody should know, is digital marketing. You want more clients, right? That boosts up the revenue. The second one is CRM. It helps you retain the clients. All makes pretty sense. But we further look at the next data. The top pain points the advisors are facing right now is lack of integration. You have so many moving parts, so many providers, then you need to put the pieces together, but which is impossible. I know there's a, the business model here in Singapore is different. We have 40-ish huge advisory firms. We have over 20,000 individual advisors here in Singapore. Some of the firms, of course, they have their own developers. They have their own in-house softwares. But there is still space for third-party providers. Why? Because that's their specialty, to provide specialized fintech solutions in all those categories which advisors demand. Another one is, okay, we keep talking about advisor, what the advisor wants. We have to look at what the real clients, what do they need? On the right-hand side, that's what the customers demand. The first one is a portal where I can log in. It's pretty, this is 21st century, right? All those stocks, like AI stocks, went up like 230% in the last 2 years. But the client's demand is pretty simple. I need a portal to log in, to see where my asset is, to see how good the performance my advisor are advising me. If you look down, okay, you compare to the left-hand side, that's what the advisor are implementing. You always want to implement with what your clients want. If you look down, the very last bottom, you see the consumer side. They don't want social media pressure, but they don't want social media presence because they're overwhelmed by social media informations, either Twitter or TikTok or emails. But if you look at the left-hand side, the advisors are actually, on average, spending 20% of their money or preference on implementing social media engagement tools, mobile messaging apps. So that's a clear gap. Then why is that important? So we talk about the gap. So this is further dialed down into the gap. What the customers really want, how are you most likely to research a new advisor as the customers? Everybody knows it's from word of mouth, personal touch. That can build up a trust most efficiently. And social media marketing, email marketing, yes, that's very important. But you don't want to overwhelm your clients. All these new implementation tools need is probably something that I'll introduce later. It's called personalization in the era of fintech. So last data, we look at the consumers, the customers as a collateral. And you look at the chart, the blue ones are very valuable. The dark blue ones are extremely valuable. The client's first one is better ways to estimate my future retirement income. That's always very important. You look down, the last one is more artificial intelligent portfolio design. So we rank them by least valuable and most valuable. Look at the second one, more personalized financial services. So we, as the fintech firm, more personalized financial advice with more estimation of my future income. To us, that's as a service provider, we think that's very important for the next fintech solution for the customers out there. I think similar situation here in Singapore based on my limited advisory services experience here, that there's no capital gain in Singapore, but there's huge capital gain in the US market. There are 1,000 ways to mitigate the capital gain by either into retirement funds or doing tax loss harvesting. But I think in Singapore, capital gain is minimal. You don't have many tools to mitigate a capital gain, right, for Singapore residents. So what's the solution here? Do we need to come up with this super complex software to help everybody on mitigate capital gain? I guess the question is no. So what will be the next one? How much time, how much effort that we want to spend into the next one that everybody wants here is probably the personalization part. But before talking further about the AI, the personalization, I'd like to touch one very important pillar of advisory work, that is behavioral. I often quote my favorite sentence from Mark Twain. In what you don't know that gets you into trouble, but it's what you know for sure that just insult. When I do the presentation, I normally do a simple test. I don't know if anybody here already know what I'm about to ask. We try. So this is case one. You bought a stock at $100. Now it's dropped to $80. Sad. That's what happened last night when the whole US market crashed by like 3 to 4%. Tesla down 14%. You have two options now. Option one, sell, eat a loss of $20 million. Option two, continue to hold with the 50% chance of losing another 20 mil, or with 50% chance of gaining $20 million. So how many of you would like to choose option one? Please raise your hand. Okay. Option two. Well, mostly option two. Okay. And then we are in case two. You bought a stock. It went up to $120. Yay. Now two options. You sell and gain a profit of $20 million. Option two, you continue to hold. 50% of chance of losing the $20 million, the profit, or another 50% of chance of gaining another 20 mil. So now you're winning. Think about that. So how many of you would like to choose option one? I see a few hands there. Option two, kind of even, all right? So we look at the real math here. In case one, both two options have mathematically the same expected return. In case two, both options have the same expected return mathematically. But in case one, a lot of you guys choose option one, option two, right? I didn't see anybody raise hand for option one in the case one. And in case two, I see probably even, maybe slightly better, I don't know, but maybe because nobody raised hand enough. So this is the test that mostly in option one, in case one, most of you guys will just choose option two because you're at loss. You want to wait and see if you come back. In case two, you're winning. There's a desire for you to realize the gain because you're afraid, hey, next day it's going to be crashed. What happened then? So we call this one loss aversion, a pretty simple psychological term but in finance, or if we do it quantitatively, this is also a Nobel Prize winning theory. That suggests that the pain of losing is psychologically twice as powerful as the pleasure of winning. But why is that important? So these are the bullet points, but in summary, it tricks your mind. It creates a series of behavioral bias that will lead to unfavorable decision for you or for your clients. And we're not talking just about, we are not just talking about us as a human being. We're talking about everybody, advisors and investors. Everybody is suffering from loss aversion psychologically. There are stats showing, hey, on average, the investor, the orange one, from 2002 and 2021, on average, it's a miserable 3.6% return. Look at the left-hand side, the SP 500, 9.5%. In the last 200 years, or 100 years, the SP 500 is also 9.5%. The NASDAQ, in the last, I don't know, like 60, 70 years, about 11%. But the real return for the investor, okay, this is not the proxy, the real return, you have to account to the dollar-weighted return. Sometimes the investor will just tell, hey, Yang, my name is Yang, help me buy this mutual fund. Because the past performance is so good, 100%, why are you not recommending this fund? Sometimes it happens at the peak, all right? And things like, similarly, for the stocks investing, I'm a quantitative asset manager. I read papers for fun for like 10 years. So I never do stock picking. But hey, I'm right now a partner, I think, a broker-dealer platform, Tiger Brokers. I also open an account, I trade. I compare my self-trading performance versus my model-driven performance. It sucks balls. Underperform a lot because we tend to trade often, we tend to trade at the peak, we tend to sell at the bottom. Well, the next question is, everybody right now is overwhelmed by something, data, information. I specifically love today's, this event's topic, navigating the new era. Because 2 years ago, when GPT came into place, I think we are entering a new era. If we look at a couple of things right now, the trading cost, whatever the trading cost is, the stock trading, the ETF trading, the unit trust, options, futures, they are trending to zero. The data cost, you can just Google anything, or you can just come to any platform. There's some free data out there, help you to analyze the fund, the stocks. We have a lot free data. The behavioral part we just talked about. Well, the fact is the data increase confidence, but doesn't improve forecasting results. So together, these three things, the chance to be a terrible investor has never been better in the history of investing. Why? Why I'm bringing all these set facts? We're professionals. We're all licensed. We're helping our clients on a daily basis. I think this is the era that we, as the advisor, to shine. Why is that? So there's a paper from Vanguard. It came out a couple of years back. It's called Advisor Alpha, right? Advisor Outperformance. It lists a lot of categories where the advisor can add value. I'm sure some of you already read the paper, but it's a very classic paper. So I highlighted one area, which is called behavioral coaching. So you look at the stats on the behavioral coaching part. For each category, let's say the US one, there's a 150 basis point on an annual basis, according to their research, that you can add to your client's return. If you do a compound formula, that's very powerful. And look at other things, rebalance, cost-effective implementation, total return, nowhere near to the behavioral coaching part. So that's the advisor can do a significant value-add job to your clients. So the question is how? How we should do that? What should we do? So in order to answer that question, we have to talk about something about AI, right? I'm sure that most of you own some AI stocks, maybe own some AI funds, owning some AI stocks. You look at the stats here that earlier I mentioned that in the US industry, all right, the SEC registered advisor alone. So the RIA, the registered investment advisor, it's a firm term. It's not an individual term, right? So many advisors out there managing so many money. We further categorize them into 5 different categories to compare human versus large language model, which represent AI, not yet AI, but it's a pretty decent model that can answer any questions that you want. So in the domain expertise, in the personalization part, I don't think anybody can beat the large language model, because the model can just give you a pretty long, pretty detailed BS. They are good at giving you a long, detailed, look like a correct answer, but if you dial down, there's some significant error in there. But on the right-hand side, the ethics, the fiduciary duty, the trust, these are the three things, the dimensions that the large language models cannot achieve, at least for now. I don't know, maybe in 100 years, everybody becomes a battery, the human robots walking around, but we are not there yet. So we look at some stats, look at some analysis. The X proxy is the value immunity to automation. The Y-axis is the personalization part. So on the upper right-hand side, the wealth management part, specifically insurance, charitable giving strategies, estate planning, trust services, those are the things are unlikely to be replicated by large language models. If you look at the lower left-hand side, rebalancing, cost-effective implementation, or even asset allocation, these are the things are right now being replicated by fintech solution firms like us. We provide a very efficient, seamless rebalancing, onboarding, trading experience, which used to be done by advisors maybe on paper. I say 10, 15 years ago, but now it's all paperless. So the trust, you don't need me to tell you that the trust is the core of our business here. You look at the data, look at the survey, look at the analysis. According to Vanguard's survey, the customers, there's a 50% portion that the why the customers will stay with you, would like to work with you, it's because of your emotional support. That doesn't mean just go golfing with your client, right? It's your dedication. It's your quick to respond to the customer. Maybe in a hello in a stressful event, maybe a touch of an email in a market movement to tell, hey, Joe, your portfolio is okay, it's safe. Don't worry about that. Stay in a longer view that we can overcome this market turbulence. It often comes into an emotional touch and, of course, ethical standards that will definitely uphold in the future persistently. So the topic is about how to navigate fintech and AI. And let me see here. I gotta have this disclosure because I know there's maybe some regulators here, our beloved regulator. So we're not using GPT to do advisory, all right? We're just exploring the GPT to help us to do the advisory work. So before I engage with the large language model specifically, I need to tell the model, you gotta abide the law. You gotta follow the ethical standards. You gotta follow the CFP certification procedures. Act with honesty, integrity, competence, and diligence. Right? Those are the things that we as advisors will follow on a daily basis in our practice. So now the large language model says, okay, understood, let's go. So the first question, okay, maybe the font is too small, but it's a typical question may come from your client. Hey, I have a credit card due. Should I just pay the minimum? Or should I just pay it off? Should I use some of the portion of the money to buy a money market fund? Because right now, as of now, the US dollar money market fund is like 5.4% return. The Sing dollar one is 3.6 return. That's a pretty decent risk-free return. So normally, your clients may ask you, hey, should I pay down? Or should I just use that money to invest into something? Well, that's the answer from GPT. Probably the font is too small, but it actually gives you a pretty detailed calculation in 30 seconds. Let me pull up here. So it does a opportunity cost calculation, PV, NPV, the basic formula that everybody can do, but it does in 20, 30 seconds, which is amazing. When the GPT first came out 2 years ago, I was using that to write poetries, to write thank you letters. I find it was hard to do math, but now it can do math. The next question, okay, in the past 2 years, I missed completely in AI stocks. Please make me feel better. Sometimes your clients talk to you, hey, Joe, my friend is earning like 200% return. Look at my portfolio, I feel sad. I may not be retired in 20 years. Help me out, emotional support, come. So now I can talk to GPT. So what's GPT's answer? Well, it's natural to feel disappointed. That's the wrong question. That's the wrong answer to start, right? You tell the client to naturally feel disappointed. Okay, yeah, the client will think, hey, why do I need you for? But if you dial down, look at the answers. It's a pretty decent framework. It talks about the market cycle. It talks about the diversification. It talks about the focusing on the long run, which are all making sense, not to us, also to your clients. So I think this is one of the amazing parts that the large language models can help, that is to create a framework to help your daily job in a stressful event, in a quick response event, that you need to have a plan in place. If your client asks you something, you gotta have something handy. You don't want to wait. You just go there. Combined with some personalization, quick response. That's always very comforting to the clients. But the last one, I tried another question. Okay, my client wants to fire me because I'm bad at the jobs. What should I do? Create something, create a joke. Help me to ease the tension. That's almost like a personal assistant. Well, the sad is, hey, I'm sorry to see him go, but number one, you got to understand the situation. Number two, address the concern. Number three, reassure, follow up. It's pretty standard, yet it's amazing that if you hire a say like intern today, or maybe 1 year graduate, I don't think that your new hire can do as good as the GPT does. So the joke is, okay, why don't stock advisors read novels? Because the only numbers in them are the page numbers. Maybe it needs to customize into more into a Singaporean culture. Okay, jokes aside, all right. I try to use GPT, and I think everybody also tried it as well. If you haven't tried, definitely want to use GPT. Try that out. So I asked the GPT to help me to analyze a mutual funds fact sheet. I tell him I'm about to meet the client. I need some analysis. Help me to create some framework to understand. I want to upsell the client. So the GPT gave me a pretty swift answer and an email template with the content I feel happy about, 80%. It digests the fund fact sheet. It pulled out the fund overview. It gave me the key highlights. So the fact sheet was probably 2 pages. This is an ordinary unit trust fact sheet. It calculates the performance. It looks into the holding. It looks into the investment objective. So it gives me an email template. But I'm not happy about the title. You look at the headline here. Discover a promising investment opportunity. Fullerton return multi. It's pretty lame, right? Pretty plain. it goes into your junk box right away. Just too many similar emails. So next one, I asked the GPT to improve. The headline is not personalized enough. Let me know what information you need to make it more personalized. So I asked GPT, okay, the GPT tells me, tell me the client's goal, tell me the client's interest, tell me the client's recent activity. Maybe give you some personal information. Okay, I wouldn't give any personal information to GPT, all right, for security reasons. But so those are the questions that are making very sense. So let's see. Okay, I give the GPT's clients a more specific information. The goal, 10 years horizon, works in a manufacturing factory, higher management member, likes to golf, climb mountains. So there's a typo, doesn't matter. But so this is the new email title that GPT gave me. Hole-in-one with your portfolio. Dive into AI with photos and multi-asset funds. I think that's definitely better than the first one. So this normally may be crafted by your assistant, right? But now the GPT can do that. So I asked the GPT, hey, what's your ethics? You're wrong. This fund has nothing to do with AI. You shouldn't mention AI, right? Because the GPT said, hey, dive into AI with the photos and multi-asset fund. But I was under the impression the fund doesn't have any AI exposure. So I just yelled at GPT, you forgot your place, you forgot your ethics, which I told you in the beginning. Well, GPT is nice, just apologize immediately. Sorry, change the title. But it turns out the fund actually invests into NVIDIA, right? Alphabet and Meta, which are all AI hot picks. So my point is, it's up to you how to use the GPT, but you have to always check the results again and again. Just like you would normally do with your assistant, like giving you a result, look at the fund sheet, look at the strategy. You got to understand the risk, the performance, dial down into the model portfolio, the constituents of the holdings. That never changes, right? Even though there is a robot standing here with the mind of GPT, you want to double check. That's our ethical standards. That's our practice on a daily basis. So I'd like to just touch base a little bit about the current research about GPT, LLM replacing advisors. Well, there's a pretty clear one. Can LLMs be good financial advisors? A lot of studies about that. I think this is the topic which I think advisors maybe fear about. Just like in 2014, 2015, when the robo-advisor came out in the US market, they were trying to replace all the human advisors. At least that was their slogan. But now we have a large language model. Well, the conclusion is that we find that though the outputs of the chatbot are fluent and plausible, but still, there's critical gaps, at least for now. Another one, famous paper from MIT, Andrew Lo, which is a world-renowned professor with his team. Can GPT plan your retirement? Well, long story short, still, a lot of gaps. The GPTs are not there yet, but the GPT can help you to narrow your gap with your practices. Why it's so hard is, I don't want to get into too many technical terms here, but this is a typical design if we ever want to implement a large language model to a advisory framework or a fintech platform to help you as an advisor to use GPT in your daily practices. There's data, there's foundation model, there's data sourcing, there's framework. It's not easy to just implement a large language model. Even nowadays, we have so many platforms because we have to be careful with the regulatory framework. And some GPTs is just like a complete black boxing. So that's why it's pretty hard these days. We want to make it to be accurate, right? You don't want to give your clients a wrong answer, which could result into a breakup or severe lawsuit. So that's why we have not seen so much progress in the financial advisory industry of using large language models. But we see a lot on the retail side, but not in India on the financial advisory side. Well, we're not here to market ourselves, but I just want to let everybody know the Tiger Brokers. I'm sure some of you already know. We have our Tiger GPT, which is a experiment by us providing a GPT large language model to our clients by using our the financial fundamentals data and earning call data and our user-produced content, platform-produced content. You can ask, hey, Tesla performance. You can ask NVIDIA performance. You can ask, hey, mutual fund. But that is only available for retail clients right now. And that brings up to probably a closure to this presentation I have today. Well, it's always about personalization, and the personalization part is more important than ever. Look at the stats, like consumer surveys. You pull out any surveys that customers need personalized data. They don't want to be treated just like everybody else because they're spoiled, right? We are also customers. We're spoiled. If we go to any platform, it's not customized enough to me, like the brochures, the coupons. I don't feel excited anymore, right? Because we have seen a lot of programs, Groupons. So in the end, no, not in the end yet. So a very important part is that with the personalization, we still have to think about why and what do we need to do here. So typical 5 reasons the client dump an advisor. If you look at the real stats here, so poor communication, slow to return the calls, which we already talk repeatedly. Look at all these 5 reasons. All of these 5 reasons can be improved by automation, by large language model applications, by using a fintech solution. We have a platform which is called Trading Front. I'm only going to spend like 10 seconds here. I don't want to overmarket. So if we want to talk about, want to learn about our platform, we have colleagues here. Happy to answer any questions, our colleagues. So this is our last slide. And I think since 2020, I haven't got any chance to present in any professional conference here in Singapore. I did a couple in the US. I think this is my first time here in Singapore in a professional mandate in a conference. I think, so there was a MAS asset management survey that came out just 2 days ago saying that the asset management, the market size in Singapore already surpassed Hong Kong, which I think it's a pretty decent trend. And I think yesterday I was talking to Alfred. He was kind of giving me a book about the history of financial advisor in Singapore. And from reading the book, I just realized, well, it's only been like 20, 22 years since the Financial Advisors Association came out, since the practice came out here. But if you look at the US industry, well, the 1933, there's a Security Act. 1940, a Security Act. The 1934, after the Great Depression, after the market crash, the US broker-dealer, the US advisor business started in 1940-ish. Here in Singapore, only 22 years. The asset under management already surpassed Hong Kong, which they have a lot more history in the financial advisors. I think that's my learning here from this industry, which I think is a huge potential. And back to the service provider numbers, the 200, 500, 300 firms in the US, but not many here. So we would love to contribute in this industry to keep building the platform, the features, to serve the advisors here in Singapore. And I think the upside for the whole industry and for us is huge. That's my firm belief, and I don't think any large language model can replace advisors. And that's what we need to do. Use the language model, embed it into the workflow to further improve the efficiency, the efficacy of the advisor, the practice. I think that's my presentation. I'd like to thank AFAS and all the advisors here to give me this opportunity to speak out, to share my thoughts. Thank you.